Welcome to Markets Now. I'm Michelle Rook with Allison, Thompson of the Money Farm, and we're seeing some pressure in the livestock this morning. The grains were actually here a little bit after the opening, seeing a little bit of a pop. And Allison, let's talk about this market. As far as corn, more new contract lows yesterday. We're finally bouncing off those levels here. Is this just short covering though?
That is a very good question. I guess time will tell. But overall, we know that the story is favoring the bears right now. We're talking about favorable weather. The funds remain short. We did get somewhat of a supportive report earlier in the week, but it really was as expected. So the market didn't get any fresh news to give us a move higher. We're still trading the same outlook. And so with favorable weather to start the month of July, as we get into pollination, we're not really seeing anything that can dictate the yield. Now, obviously, there's arguments to that. I would disagree that we see some of that actually follow through. I do think yields will move lower, but obviously we know the USDA can be a little slow on moving those numbers to a friendly side. But when you look at the breakdown of where the acres were for corn, we did see from the March intentions, some of the big top producing states actually plant less corn, and we saw more of the corn acres get planted in the fringe areas. And a lot of these fringe areas that added corn have had weather issues of our own. We just had some pretty bad, severe storms going through western Minnesota, North Dakota, South Dakota, even Wisconsin have had some issues. So I think it's going to be really hard to pull that off. So it's good to see that we're getting a bounce and a recovery here off of the lows. And we're talking to the US dollar hit 3-year lows. So with the pullback, it'd be really good to see some buying come in. So watching this week's export sales report is going to be pretty key here, I think, for this market.
Yeah, no, it's a good point that you make about the fringe acres, because I think there is kind of this growing belief in the market right now, and why we're seeing the pressure in corn, that yield could be above the trend line 181, right?
That's what they're talking about, that it could fall up there, especially with the good weather that we're seeing right now. But I beg to differ. Usually when you get higher acres planted, you do not see a record yield. So I have a hard time believing that that's going to be sustained in the long term.
Yeah.
Unfortunately, we just may be trading potentially big yields for the remainder of the summer unless we get some kind of a weather scare.
Yeah. The other thing that's been pressuring this corn market, obviously, is this Brazilian corn crop keeps getting bigger. We see more and more estimates here that just keep pushing up that crop because the second crop safrina has been so good, right?
Correct. Yeah, we've been hearing really big estimates. A lot of private analysts have been continually increasing it. So I think that's in the trades I hear too. Also, this week we have a USDA report next week, next Friday. So I think there's a lot of suspicion that we could see the USDA potentially increase it a little bit. Again, another bearish thing that comes down to our corn market and obviously corn futures, but it depends what we get for demand too. I know they're having some logistical issues with their soybeans. I'd assume they could probably see some logistical issues happen with corn too. So at the end of the day, it comes back to demand as well.
Yeah. All right. Soybeans, a little bounce off of new lows for the move yesterday to close just slightly higher. We're building on that today, but we're really following bean oil after the Senate voted on the big, beautiful bill, right?
Yes, correct. Yep. The Big Beautiful Bill did include some biofuel wordage as far as using feedstocks for biofuel production just from North America. So that should help our biofuel markets, corn, soybeans, and that definitely is helping giving a boost. And on top of that, we did get May crush hit a record for the month of May and came in higher than the trade was expecting. So between those two things, we're actually seeing some demand here come in. And, in the report on Monday, we did get higher stocks than what we were expecting. So with that, I think that demand just became even more important. So if we can find some fresh demand and even better domestic demand, that's definitely going to help out this market.
Yeah. Now, from a technical standpoint here, we really need to close this November contract back above the 100-day. I mean, we took out all those major moving averages last week, didn't we?
Yeah, it was a steep sell-off the last week. It was not fun to watch. But yes, we do have some work to do. We have to get more to the upside, but we do have a lot of moving pieces. We just don't know when they're going to fall on the market. Obviously, weather here remains good, but again, it goes back to demand. We know the supply is kind of there, but we need to be looking at demand. So exports will be the next thing to watch, and we know that we're also dealing with a tariff deadline coming up next week. So whether we get some trade deals that could possibly include oils, biofuels, or our grains in general would be helpful for this market in getting past some of those technical levels.
You bet. Okay, wheat market, building on the strength from yesterday. Again, is that just short covering, or is this market trying to put in a little bit of weather premium, or are there concerns lying with that?
Well, there's always weather concerns for wheat, but we are seeing a good turn here, and it comes down to a couple of things. First of all, the U.S. dollar, like I said, was trading lower. We hit a 3-year low just yesterday on the overnight. So I think that's maybe going to spark up some demand, especially because global wheat competition for prices is still there. So it just makes us a bit more competitive. And obviously we've sold off here where I think we're pretty competitive. So again, tomorrow's export sales report is going to be pretty important for the wheat market. And on top of that, we do have some weather concerns. We got in the report, especially for spring wheat. That's what I deal with up in my area, is we got confirmation that we're dealing with some pretty tight acres, the lowest planted acreage in 55 years. And we know that there's also been quite a bit of storms rolling through. So I think there is some things here that could change that up as far as what production does. And I know we're looking at favorable weather now, and the crops look pretty good around here. But as we get into mid-July, they're talking about a potential shift, and we could see some dry areas get drier. I've talked to a few guys further west and north that are definitely seeing some dry areas and in desperate need of some rain. So if they don't get it, and we're talking heat coming back mid-July, there definitely could be some shortfalls.
You talk about exports and maybe stimulating demand with this lower dollar, but are we competitive otherwise, or what's going on in the market? Because you hear a lot about, Russia trying to lower their export prices all the time.
Correct. Yes. And Russia did this week. They did lower their prices, and they're doing it in anticipation of better production, a bigger crop coming. And we hear that every year out of Russia. I think they like to rule that market. But overall, it comes down to exchange rates at the end of the day. If we can be competitive on an exchange rate for someone who needs wheat, corn, soybeans, oils, that's what it comes down to. And that'll be the key to demand, not necessarily what other countries are doing, but how we can compete given the exchange rates.
Yeah. Interestingly enough, we're in the middle of harvest. I know it's been a little slower than the 5-year average, but usually we see a little more hedge and harvest pressure than we are right now. Do you think the low is in? Can we say those contract lows are going to hold, Allison?
I would like to think so, that we're going to see some kind of reprieve here. I don't foresee new lows given what's in the market right now. We're still talking some weather issues in parts of Argentina. The EU has been extremely dry, Europe. So I think there are definitely some things here that's going to keep wheat sustained. And we're getting into harvest here. I know there's been some weather issues down south as well. We've been hearing some quality concerns, and I've heard the bushels are there, but usually that comes at the discount of protein. So there are some things here that could help our markets moving forward. I'd like to think that the low is in.
All right, let's hope so. Can you also address the exchange change that we've had here, or the change in the spring wheat contract? Because we now have not only the Minneapolis grain exchange, but also the CME, both with spring wheat contracts, right?
Yep, correct. The Chicago Board of Trade did open a new hard red spring wheat contract, and it's been there for, I don't know, a month or two. And basically, it's they wanted their own spring wheat contract. Minneapolis spring wheat has been traded through the Minneapolis Grain Exchange, and it's been cleared through CME. So just on Sunday night into Monday, we saw the CME change that. So the CME is no longer clearing Minneapolis wheat. They're clearing their own. And it came with hiccups on report day. It was very difficult to trade, but it seems like they're kind of starting to work it out here. We're seeing it kind of start to trade in tandem here just yesterday, today, with the other wheat exchanges, and that's good. I've had some questions about using the Chicago Board of Trade contract. It's very early in its life, so we haven't seen a lot of volume there. It's actually thinner than what Minneapolis is. So I've been staying out of it. But there's also some key quality things that are worth noting here on the specs of those contracts. Minneapolis Grain Exchange remains milling quality as far as specs for trading that contract. The Chicago Board of Trade new contract has lower specs, so it's not necessarily the milling quality that we're used to when we're trading spring wheat. So it might have a harder time grasping onto. I know with some producers around here with the lack of quality last year, it may sound like a good idea, but at the end of the day, a lot of our spring wheat does go towards milling quality. So I have a feeling for end users, especially up here for spring wheat, I think it's going to be hard to leave that Minneapolis contract unless we see some spec changes in the Chicago Board of Trades.
Yeah. Well, spring wheat was already a illiquid market, and then this adds more illiquidity to it. So I don't think it sounds but the best for farmers. All right,
No.
just a quick comment on cattle. We're trying to get the border reopening with Mexican cattle coming back in, kind of absorbed here in the market. Do we have much lower to go here, you think?
Well, yesterday was definitely a steep sell-off, and to be honest with you, it seemed like it could have been a bit overdone. They haven't opened it yet. We don't see them start until the 7th of July, and it's going to be a slow build. It's not just going to flood our market by any means. It's a slow, progressive thing over a few months here. So I think the market did get a little bit ahead of itself. I think it's still going to come down to cash. Cash has been remaining pretty strong. And with the future sell-off, yes, cash could come in a little bit lower this week, but it's probably going to give us a floor on this market on how far futures can go just on that news alone.
All right. Thanks so much, as always, Allison Thompson with the Money Farm. That is Markets Now.